Okay, traders, welcome back. Euro USD outlooks, as well as a trade recap that I took last week, right? So I want traders to understand exactly why I took this trade and why it was a high probability trading setup, right? So again, in this video, I'm going to be going over how you can integrate time and price. And specifically, we're going to be going over my favorite topic, which is actually the economic calendar. So the economic calendar for the week, if everyone could just focus on this right here, right? So this is the economic calendar from Monday the 28th up to Friday the 1st. So this was NFP full of news, right? So the question now becomes, how do I trade news events? How do I navigate around the volatility, and how can I use them to my advantage? I get this question a lot, and it all comes down to time and price theory. So what do we mean by this? So time and price theory on the charts is one of the most important things, right? So we understand the week itself was bullish, right? So we had a bullish weekly candle. So our weekly candle looked something like this. If we just draw this out for people, imagine we have a weekly candle, something like this. So it's going to be a green candle, and the green candle is going to have a high to it, of course, up here. And it's also going to have a low to it somewhere down here. So this is roughly what the green candle looks like, right? If we make this a little bit more realistic, the green candle will look something like this. Now, as a trader, your job is to understand that we want to be buying as close as we can below this weekly opening. So if this is the weekly opening price, we want to be buying below this level. So how do we do that on the charts, right? So let's just replay price back to the weekly opening, and let's understand how we can actually calculate this weekly opening drive. So I call this the weekly opening drive or the weekly opening expansion, right? So here we have 5 p. So we want to go to 5 p.m. Eastern Standard Time, right? So 5 p.m. Eastern Standard Time, and you want to simply mark out the opening price. This is very important to do, right? So here we have the opening price. So this is now Sunday, 21 o'clock UK time, and we simply want to draw a line this way. This is the weekly opening price. The weekly opening price is the most important thing. Well, why is that? Well, if we go back to our diagram over here, this is the green candle, right? If we look at the green candle over here, we have the weekly opening price, and our job as a trader is to simply buy below this weekly opening off a fair value gap. And it's really as simple as that when you understand time and price theory. Again, when we go to the economic calendar, what we see over here is Monday was a no news day. So when Monday is a no news day, and on top of that, it's a Monday, that reduces the probability or the likelihood of me taking any trades. I prefer to stay out and stay cash. And the reason I prefer to stay cash on a Monday with no news is it's typically rangy. And that is exactly what we got over here. So we had the Asian range as normal. And if I continue to play price on, we had London give us a little drive up. So we kind of saw this as a manipulation to the upside relative to the weekly opening. But if we look at how Monday actually played out, Monday itself was very, very rangy. And now this leads to Tuesday, right? So look at this price action over here. All of this over here. This I'm going to label in red because it's very, very choppy price action. And this corresponds with Monday having no news. So when Monday doesn't have any news events, this makes it incredibly low probability, right? So Monday was a day to avoid, and it's very easy for you to systemize this because there's no news and it's a Monday. If we quickly go to the following week, which is now Monday the 4th, we have pretty much the same thing. So I will be looking to stay cash this coming Monday, the 4th of November, as there's no news events on that Monday. This is very important to understand, right? And this is what my trade thesis was on Monday the 28th. Tuesday is where things become interesting. So again, we have our weekly opening, this dotted red line. This is the most important line you will ever draw on your charts, right? I've made tweets on this, and it's very, very popular, right? In the comments and in my questions. So let's quickly go over this. Now, if we play price on Tuesday, I want people to see what the London session did, right? Because every session in the markets has a purpose. First, we start with the Asian session. Okay, so the Asian session is a very, very important session because this is the accumulation. So everyone knows the AMD, but few actually understand how powerful it is and how to apply it correctly. This is the accumulation of the market. This is where we build liquidity in the markets. Once we have an accumulation, it's important to understand what the London session actually did. The London session swept the Asian high. So this is a sweep of the Asian range high. Okay. This is a liquidity sweep. This is buy side liquidity. Also notice how we have Monday's high and Tuesday's London high. Both of them are relatively equal highs. This is how we spot liquidity in the market. A liquidity tip I want to give to everybody is you want to be targeting session highs and previous day highs. And this is a very, very high probability buy side liquidity pool because we have a session high as well as a previous day high. So this is what you want to be training your eyes to see. So once we've had an accumulation, this is our manipulation phase one. So we actually had the power of 4 playing out over here. So this is phase 1, right? This is phase 1. This is now phase 2. Phase 2 is essentially the manipulation part 1. Manipulation part 1 looks to entice early buyers into the market. Right now we had a very aggressive move to the downside, right? And so when we play price on, we want to understand how price actually behaved, right? This is very, very important to understand. And I want people to understand how you can use the weekly opening price structure and fair value gaps to your advantage, right? If we go to the economic calendar, we see Tuesday had some 10 a.m. Eastern or 2 p.m. UK time news events, right? We had consumer confidence and job openings, right? So we had some news events. Now, the secret when it comes to trading news events is to trade after them and understand where they are occurring in line with the weekly opening price. So if we just play price on, this large wick was the candle, and we also had a confirmed market structure shift. And this is my entire trading strategy revealed, right here. This is my entire trading strategy. What I'm looking for is 3 things to take this trade. This is a very, very high probability trade, right? Let's understand what those things are. And notice how price has left a fair value gap below the weekly opening price. So this trade has swept the weekly opening price and the buying entry is below the weekly opening. So we're below the weekly opening. I'm just going to write WO for sure. That is rule number 1. Rule number 2 is you want to see a market structure shift and a fair value gap. And the fair value gap is just below the weekly opening. That's the second thing I want to see. The third thing I want to see is we want to see a PDL or a previous day low sweep. What do we mean by that? Well, if we look at Monday's liquidity was swept by this aggressive move to the downside. So this is where we see a sweep of liquidity. This is a previous day low sweep. This makes trading very, very high probability. And this is what I look for when it comes to looking for buying opportunities. A buy trade or a bullish Judah swing will occur after a major sweep of liquidity, often previous day lows, and if this was a bearish example, previous day highs. So this is what makes the Judah swing extremely high probability, right? We've taken sell side liquidity, we've broken structure, we've left a fair value gap below this weekly opening price, and we've completed our AMD model, right? Our power of 4. So accumulation. This is phase 1, phase 2. This is the ICT Judah swing. If I just label that ICT Judah swing, and this is actually phase 3, right? This is phase 3 of the move. If I just spell that right, this is now phase 3. And the 4th phase is essentially the distribution. So how do you catch the distribution, right? Let's see how we can catch that. So if I just play price on, what we're looking for now is we're looking for a discounted area to buy from. So this is our dealing range. So we have a swing low to a swing high. Our fair value gap is just over here. So if I just continue to zoom into price, this is going to be our fair value gap. So we have an inefficiency over here. So people can see that. I'm just going to label that in blue. So this is our inefficiency. This is our fair value gap. And this is where we're looking to key off. Notice how we're keying off in an area below the 50% level. So we retraced into a discount before looking for the buys. That is important to understand. So from here, a long trade could have been taken, right? So because this is Tuesday is likely to give the low of the week for a bullish week, right? So I'll repeat that. Tuesday is likely to give the low of the week for a bullish week. It is typically Tuesday or Wednesday. And the way you decide whether it's Tuesday or Wednesday is simply by looking at, number 1, the previous day low sweep. So previous day low sweep, but number 2, the economic calendar, which is very, very important. Once you have that in place, this is essentially where you're looking to buy off, right? You're looking to buy from a discount. I personally like to keep my stop loss at the Judah swing. And the next question I often get is targets, right? Where do you target in the market? Targets are very important, and it's very important to take partials and not to be too unrealistic and greedy with your targets. Well, the first target will be the previous day high, right? This is Monday's high over here. This is the previous day high. So we swept the previous day low. We're simply looking to target that previous day high. And that in itself is a 2.2R trade. So that will be your first target in the market. But if we just continue to zoom out of the markets and really see where this trade could go, from a strategic standpoint, if we zoom out a little bit, what we're looking for is the Friday high. We're simply looking to target the Friday liquidity over here. We've got the previous day high from Monday, but we also have the previous day high from Friday. So once we have our targets established, we see that price again just rally to the upside, right? So this is my favorite type of trade to catch, right? This is my favorite ICT model, and it's one I enjoy trading the most. It's very, very simple, very mechanical, and hence it's very good at reducing your emotions in the markets, right? So again, to quickly go over the rules, what we're looking for is a market structure shift qualified by a fair value gap. You want to have the fair value gap ideally below the weekly opening price. I'll just write WO for short. So market structure shift, fair value gap, you want to be below the weekly opening price. You want to see price retrace into some kind of a discount for the dealing range. And you want to sweep a previous day low. So you want to have a previous day low sweep if you're looking for a bullish scenario, and a previous day high sweep if you're going for a bearish scenario. So as you can see, this was a fantastic trade, which eventually played out, I believe, 1 to 4, 1 to 5R. And it's essentially my favorite type of trading strategy, right? It's super mechanical, and many of my students have been funded. I myself have been funded multi-seven figures using this particular strategy. And it's something I've developed over years and years of trading ICT, smart money concepts, supply and demand. This is something that works on Euro USD and GBP USD very, very well. So if this is something you want to steal, by all means do it. I am offering free one-to-one strategy calls within Price Action Lab. So if that's something that interests you, comment mechanical, or simply just comment what else you want to see. If you want to book a session, comment that too, and I'll be more than happy to help you in your own journey to get consistent, profitable, and funded.